Give you the business update now. The JSE set for another blockbuster day. On Wednesday, the all-share index surged the most since the early days of COVID-19 pandemic, demonstrating the erratic behaviour of the market. For a look at how the JSE is performing in early trade, let's talk to Makwe Masilela, Chief Investment Officer and founder at Makwe Fund Managers. And Dr. Masilela, thank you very much for your time. Give us a sense of how the markets are performing in early trade after that rally yesterday.
Good morning to you and to the viewers. The market is continuing, extending the gains that you've seen yesterday of over 4%. And the usual culprits, you are industrial doing okay, also our financials doing okay. And I think people is all at the back of people are optimistic, number one, that there might be some progress when it comes to those ceasefire talks. And also the fact that you've seen that the U.S. Federal Reserve delivered as we expected, that they will just increase interest rates by 0.25%. So there were no funny surprises. So the markets are still positive that going forward there will be some ceasefire.
Yeah, let's talk about the rand, which is now moving just below the 15 rand mark against the dollar. Talk us through the elements influencing these moves.
Remember, as we said, the U.S. was expected to increase interest rates, but yes, as much as the guys were more hawkish, the tone thereof, but they didn't come with any surprises. So as a result, we saw the dollar itself weakening, and then also bearing in mind that the rand itself is a commodity currency, just like your Australian dollar, which is also firming up today. Commodity prices are continuing to go up, so the rand is also benefiting from that end, and so that is helping our rand to trade below the 15. But should the other way things happen like we expected the Bank of England to make an interest rate decision later today, and we expect an increase there, and then also we expected the Bank of Japan to make their interest rate decision tomorrow, so that might change the situation. But as it is now, we're all benefiting because of the weaker dollar and also because of commodity prices.
Yeah, let's talk about the very story you keep referring to as widely speculated, the U.S. Federal Reserve hiking interest rates by 25 basis points. This is the first increase in 3 years. Dr. Masilela, talk us through the ripple effect of that decision on other reserve banks around the globe.
Remember, this decision truly was well telegraphed, and that's all happening before the war, that they are prepared to start increasing interest rates. Why? Because of high inflation. And it's not just high inflation in the U.S., it's a global problem. And now, as it is now, you look at the U.S. mandate, the Federal Reserve, they've got a dual mandate of price stability, that is to increase and make sure that inflation is in check, and also of employment. And as it stands now, the U.S. unemployment rate is below the pre-COVID level. So the guys have got all the reasons to believe that the economy is doing very well. And now with other central bankers, the Canadian Central Bank, our central bank home here, we still have the same problem, which is inflation. And now the question is, if it was not because of the war, we should be seeing our economy picking up. As an example, back home here, look what happened to our January retail sales number. They managed to increase by almost 7.7%, and it shows you that the war just disturbed the economies from continuing to recover from COVID. So all it says is that central bankers believe that the economies are strong enough, economies are recovering. It's just only the speed bump because of the Ukraine-Russia crisis. But other than that, the economies are solid enough, because probably you cannot increase interest rates if you strongly feel that the economy is still weak. Because the first reason you decrease interest rates is to try to boost those economies which were struggling.
Very, very interesting explanation there. Let's conclude the conversation with Meta Investments publishing its results for the year and including a dividend announcement. All is good news in the ears of the shareholders. Talk us through those numbers.
Definitely, and you look at that increase when it comes to dividends. The dividend per share was increased by 20%. That is great. And remember, Makwe themselves, these guys, they manufacture, distribute, and retail products for energy storage and automotive components. And we know when it comes to electricity, when it comes to alternative energy, people are busy moving into that direction. So demand thereof is picking up. We've seen with the motor vehicle sales numbers, they've been trying to pick up as well. So the guys doing the components thereof have managed to increase sales. Hence, revenue is up 23%, operating profit up 107%, and EBITDA, which is a measure of the company's overall financial performance, is up 80%, and their profit and earnings per share up 139%, but the cash generated from operations are down 39%.
Makwe Masilela, thank you very much for that markets update. Founder and Chief Investment Officer at Makwe Fund Managers.